please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, the markets are holding more or less flattish as we speak. Plenty of action, though, in the mid-cap space. A couple of stocks, they're moving around. Let's see where we go from here. For the time being, the Nifty is as flat as can be, holding mildly below the 10,700 mark. Pharma stocks, the select ones, are doing pretty well in today's trading session. Some of them as well have moved to the high point of the day. So pull up stocks like Dr. Reddy's, they're seeing some price volume action out there. Sun Pharma as well is moving quite well in today's trading session. So get the Pharma index up for you on the screen. That's the segment where you're getting some green on the screen. Sun Pharma, by the way, moving back towards that 600 rupee mark odd. Hey, Manglam.
Hi, Nigel. You know, you said it. Top three gainers on the Nifty, all belonging to the Pharma pack. Do not miss Lupin as well, closer to that 930 mark at the high point of the day. And as we speak, we're getting some news as well from the pharmaceutical index. This is what usually happens when the stock's doing well. You get some news as well. Suven Life Science, they've got some approvals. There was the flash that ran by on your screen. In fact, this is with regards to some product patents that they've got in India, Singapore, South Korea and Israel. With that, we will take the show forward. First up, all the top stories that we're tracking this morning. Shriram Transport, that one tanks in trade on the news that the company's provided guarantee on its NCDs worth 870 crores issued by a group company. The stock refuses to take any relief even after the management clarifies to CNBC TV18 that they expect the loan to be serviced by SBL and don't see any need for provisioning.
And Kwalty board defers decision on buyback, bonus and dividend. The company says that the matter was intensely debated in context of the current situation and the future vision. The stock is down 5%.
Race for Fortis continues. IHH and Manipal TPG submit binding bids. Sources tell CNBC TV18 that Munjal Burman and Radiant KKR have not put in their bids.
And all cargo logistics, that stock is higher in today's trading session. The promoter hike stake by close to around 0.5% in yesterday's trading session. Let's get straight to the call on the Nifty then. Ashwini Gujral joins in. Ashwini, good morning. What's the call on the Nifty? We're holding mildly below the 10,700 mark.
See, the interesting trade is happening on the bank Nifty. Now, 26,150 thereabouts was a previous low that Bank Nifty has hit. Now we went below yesterday's low on Bank Nifty, and now we are turning around with HDFC Bank taking the lead. So my sense is that given the 4 or 5 narrow range days, it's quite possible that Bank Nifty has made a trap, and you could see short covering coming in on Bank Nifty. I am saying this because Nifty futures was down like 8 points in a discount. That has recovered and is now in 2 points premium. So in case the financials start to see short covering, then the market can get back above 10,700 and possibly even move higher. So we have cut our shorts on Bank Nifty and now are long, because it appears that banks and financials are not able to show great traction on the downside. Having said that, Reliance Capital is a sell with a stop of 365, target of 350. Reliance Infra is a sell with a stop of 385, target of 368. And Britannia is a buy with a stop of 6200, target of 6450.
Right, Ashwini, you spoke about Britannia, another consumption stock which is doing well in today's trading session, which has otherwise been an underperformer, is Colgate. That has moved to the high point of the day. Any word there on Colgate?
See, Colgate was correcting all this while. It had a sharp rally from 1100 to about 1280. So I think a fresh trend is beginning on Colgate. So even that can be bought. But I think the clear trap trade is now working on the Bank Nifty. And I wouldn't be surprised if you could do 100, 150, because if the range is going to break on the upside, then there will be serious follow through, because lots of shorts should be there in Bank Nifty.
All right, Ashwini, thanks a lot for that. In fact, interesting, as you speak, the Bank Nifty has now recovered all of its losses, currently trading into the green. And Ashwini expects a 100, 150 point rally on the Nifty Bank itself. In fact, we'll slip into a short break, but as we do that, onto a quick programming reminder. As the banking system is going through a tough phase, What should be done to strengthen and improve the efficiency? Catch an interesting conversation on the impact of changing regulations on the Indian banking sector that Lata Venkatesh will have with a panel of experts from the sidelines of the SBI conclave today at 12 noon. Stay tuned to CNBC TV 18. With that, we'll slip to a short break. Come back, we talk about Subros. That stock on our radar. We get chatting with Mr. P.K. Duggal, the Vice President of the company. Stay with us. Well, we have with us the management of Subros. That stock is on our radar. To discuss their FY19 business outlook, we have with us Mr. P.K. Duggal, the Vice President of the company. Thanks a lot, Mr. Duggal, for joining in. First up, if you could tell us a few basic details about your company in terms of what is your current order book, what has been the inflow so far in FY19, and what do you expect it to be in the remainder of this year, sir?
Yeah, good morning. This quarter, June first quarter, is good for the auto industry. All of our OEM has done a spectacular result in this first quarter, almost double-digit growth. Same is true for Subros. We have also grown almost more than 20% in this quarter. Order booking for the rest of the quarter is also good. We are expecting this year we will be matching the last year performance between 15–16% growth. Overall, auto industry is on a positive side this year.
All right, Mr. Duggal, sir, I wanted some details here. Non-passenger vehicles part of your business. Till last year, it was only around, that was around 10–11% approximately. What was it in FY18? Yeah. And going ahead, sir, do you expect it to go to around 20, 24, 25%? What's the expectation, the non-PV part of your business?
Yes, last year we promised that this year we will be crossing this 9–10% CV business or non-car business to the level of around 14–15%. We are as per the plan, and in long term we will be touching this around 23–25% out of our total revenue.
By FY20, FY21?
Yeah, 2021 it would be around 20%, and then 1 year later it would be around 24–25%.
Okay, all right.
How much does Maruti account for in your total revenue right now? Because I believe their Sanand plant is now fully operational. How much will that give you in terms of additional revenue this year?
So Maruti overall as part of our total revenue is contributing around 70%, and Sanand plant or Suzuki Gujarat plant is now fully operational, and we are servicing from our Sanand plant around 250,000 numbers in a year as of now.
So that would mean additional revenue of what, 300, 350, 400 crores?
It would be additional revenue of this year because they are setting up only one additional plant this year. So it would be a delta of around 200 crores. But next year when we'll be fully operational with 3 plants, it would be a delta of around 300+ crores.
All right, Mr. Duggal, the government had notified that most category of trucks, they'll require blowers or air conditioners. That came about, I think, in January 2018. As of now, that segment contributes very measly amount to your revenues. But some brokerages on the street, they are talking about, FY20, there could be a big opportunity there. What kind of an opportunity can this throw up? Have you got additional orders coming in from some of these truck makers?
Yes, now since the blower is a mandatory requirement, but OEMs are proposing AC as an option, and the current ratio between AC and blower is between 20:80. And we are expecting by 2021 this regulation, if it is strengthened further, this ratio will change to maybe 90:10. 90 would be AC, 10 would be blower. So there would be incremental potential of around 180–200 crores available once this regulation is made mandatory for AC.
That's by FY20.
All right. Let's talk about the non-auto part of your business. You've started the business of supplying to consumer white goods companies as well. How much does that account for in your revenue? And going forward, what is the potential there and by when?
Home appliances, we started with Whirlpool last year. This year we started with E-Durable, but this industry is more on seasonal basis. So we are expecting this business will give us around 70–80 crore rupees in a year by 2021. And if we progress further to ODU assembly also, then it will add to further 100 crore additional business.
And do you plan to progress to that assembly?
ODU assembly, maybe 2021.
And currently it's how much? You said 70-80 crore by 2021. Currently how much does that account for in your total scheme of things?
It would be around 20 to 30 crore because we just started with two OEMs and now we are progressing with other OEM for techno-commercial understanding.
Mr. Dugal, sir, what is your current capacity?
Current capacity we can cater to around 1.5 million AC units.
Right, and you have some capacity expansion, I think, right?
500,000.
Yeah, you have some capacity expansion, sir. Go ahead.
In Gujarat, we are setting up. In Gujarat, we are setting up a new facility now to add 500,000 capacity. With that, we will be touching around 2 million capacity by end of maybe 20.
By end of 20, okay. By FY20, the capacity goes up by 500,000, not in FY19?
No, 19 would be incremental because we are not setting up full-fledged capacity. We are just debottlenecking the capacity constraints. So it would be even out at 1.7 million and then gradually moving to 2 million.
Right. Final question, Mr. Dugal. You know, your top line is looking good. Everyone's focusing on top line. What about the margin picture? Some input costs have been going up. So, you know, and the rupee as well has been depreciating. So I want to ask you a two-part question, sir. What kind of margins can we look at? And also, I remember in the past, you were talking about localization of production, right? Your imports, have they reduced? They were at around 35%. Give us some color there.
Yes. So, as far as the rupee and the commodity going up now, so there is an impact on input costs, but we have a back-to-back arrangement with customers where they reimburse us, but on a quarter lag. So there would be a 1 quarter impact visible in our financial, but overall in a year it will even out. Second part is on the localization. Yes, we were importing around 35% of our revenue as a import component, but gradually we have an aggressive localization plan. Next 3 years' time, we will be reducing it by 15%. So our import content will reduce to 20%, and which will definitely improve our EBITDA margins.
All right. Thanks a lot, Mr. Dugal, for joining in and giving us all those details. The street will be watching out for all those developments over the next few years. With that, we'll slip into a short break. Come back. We will do a discussion with multi-system operators, all the MSOs, on the back of the latest TRAI order that came by yesterday.
Well, as promised, let's shift focus then to some MSOs or multi-system operators like Dell Networks, GDPL, City as well as Hathway. Now, the street expects these companies to see a significant improvement in their profitability with the implementation of a crucial TRAI order today. We have with us Mr. Sharma, the CEO of Dell Networks, who joins us on the phone line. Hi, Mr. Sharma. Thanks so much, sir, for joining in. Well, TRAI's tariff order becomes effective in the first week of July. What kind of an impact do you see in terms of pricing on the broadcaster as well as on the cable operators?
Yeah, good morning to everybody. And it's definitely a very welcome move, and it is leading towards 100% digitalization in a transparent manner. The viewer is going to be beneficiary, so will be all the stakeholders in the value chain. Now, so far, ever since the cable business started, since Gulf War in early 90s, I would say, the broadcasters have never declared their prices of the channel. Here onward, they have to declare the MRP to the viewer, and viewer, according to its choice, can transparently select the channels or a club of channels depending upon his affordability and the prices and his liking.
So in a sense, Mr. Sharma, you're saying that the B2B model now moves to B2C. The consumers get to choose all the channels that they want. Then where does the role of an MSO come in, and how does that impact your profitability?
The MSO is going to play a significant role in terms of delivery of the signal, that is through cable operator. All the digital headends have been under license by Government of India. We have enacted a fully digitalized network into place with all SMS and addressability into operation. That is where the major role of MSO is going to be effectively played. And it's not just the video signal. There will be broadband. That two-way signal will be enabled by, and is already being enabled by the MSOs, besides the other value additions that will be extended to the subscriber.
All right.
Overall, in terms of profitability,
Yeah.
I can easily say on behalf of all the MSO, our cost line in terms of content cost gets away. It becomes a pass-through to us. Like in case
Right.
of MSO like us, their network, we have a content cost of 600 crore rupees.
Right.
That gets knocked off in my bottom line. So that is the upside that I am looking from as far as distribution platform of MSO is concerned.
What is that number, sir, you're talking about that gets knocked off?
Roughly 600 crores.
600 crores. And how much does that mean per subscriber in terms of EBITDA?
This means roughly content cost means roughly to the tune of 50 odd rupees, 50 to 60 odd rupees per subscriber.
And currently, what is the subscriber paying? If it's 50 rupees per subscriber is the gain that you're seeing, what will it? Yeah.
The subscriber is paying roughly in the range of 250 to the cable operators. Okay. That is in phase 1 and 2. But phase 3, the subscriber is paying.
Mr. Sharma, if you could make us understand simply, sir, what is the current EBITDA per subscriber? You must be having a very rough range out there.
I won't be able to comment as of now.
All right.
If you can recheck with me in a couple of hours, I'll definitely come back.
Sure, we'll do that. In the meanwhile, we also have Mr. Rajesh Sethi, the Chief Business Transformation Officer of City Networks, who joins us now. Mr. Sethi, as Mr. Sharma has been saying, this will be positive for the industry. There would be some profits that will increase given the content cost that will be capped, and 600 crores is the number that he was giving that would be knocked off. If you could give us some commentary on this order itself. We understand that there is one clause, the 15% cap on discounts, that has been still been held. Can you tell us some details on that? And is this order final and binding? Can there be more further legal challenges to this?
See, thanks for having us here. First of all, I'd like to reiterate what my colleague Mr. S.N. Sharma was talking about. Definitely, this TRI pricing order is hugely positive for not only the delivery platforms, but also for the end consumer. We are viewing it as a democratization of content selection. This will definitely lead to moderation in our content cost growth. Content cost will get linked to the subscription income we all cable operators have. It will lead to definitely wider consumer choice, and it will be a pass-through, which leads to the EBITDA markups, what my colleague was talking about. And beyond all this, this leads to redistribution of power of packaging in the value chain, more towards the distribution platforms. Because now the packaging and bundling will really come into play. So this is what we see it, at an overall level. Definitely, this also calls for, much sharper adherence to systems, compliances, processes, and a structured delivery platform like City Network has used to gain, virtue all this. Now, your second part of your discussion was how does it impact EBITDA? We are still waiting for a lot of stuff to really get implemented and materialized. Because as of what we understand now, from the consumer point of view, this tariff order will come into play effective early January, the 3rd January to be precise, 180 days.
Okay.
So the real fun will come in the implementation part. As an organization, we are very well prepared to implement, the tariff order details in a very short span of time. We have upgraded our subscriber management systems, servers, call center. We are very well prepared to respond effectively to the higher volumes expected, and I believe so are my fellow, MSOs. We have started sensitizing and educating our business associates, our distributors, our LCOs, and now the campaign has to go towards end consumers. So this is where we are.
Right. Mr. Sethi, we are running short on time, but I just want to understand very, very simply, can this order be challenged, this TREI order?
See, it has, the order is undergoing various kind of challenges since last 1 year now, or maybe more. So we do understand that, the grapevine really talks about few more spanners to be thrown across, but I don't think there's much to gain out of challenging it again now.
All right.
We are almost at the wall now.
All right, we're almost at the wall, so we will wait for you to jump across that wall, and perhaps the benefits will come, as both Mr. Sethi and Mr. Sharma have been saying. But we'll also need to keep in mind the increased competition in this sector. With that, we thank you both, Mr. Sethi as well as Mr. Sharma, for joining in and giving us your perspective as far as the TRAI's discussion is concerned. But we really need to keep an eye out on individual stocks. And top of the mind is Shriram Transport. Tanks in trade on the news that the company has provided guarantee on NCDs worth about 900 crore rupees issued by Shriram Transport's group company. The stock was lower in trade, now going to the lowest point in today's session. Abhishek Kothari joins in with more details. Abhishek, what exactly does this mean and how much of it is priced in?
Well, Mangalam, to begin with, just to highlight our viewers, Shriram Transport has provided guarantee on 870 crore of NCDs to SVL Limited. Now, that is a unlisted subsidiary in the Shriram Group. So, while we understand this, the Shriram EPC, which is a subsidiary of SVL, is already under NCLT, and there are talks, you know, that Shriram SVL will be referred to the NCLT. So, with the subsidiary, that is SVL, and its subsidiary being referred to NCLT, there are doubts about repayments to the NCDs issued by these companies. So if this guarantee is invoked and the liability transferred to Shriram Transport, then the book value as per various analyst estimate can decline by 4 to 5%. Now, just to highlight our viewers, Piramal Enterprise holds about 10% in Shriram Transport, and Shriram Transport, as you have mentioned, that it has been declining. It has declined 28% in last few trading sessions, while analysts expect an EPS decline anywhere between 10 to 20% based on this news.
Legal part of it we have not studied yet, because this maturity is another 1 year to go, and we are quite confident that this will be serviced. So we have not really gone into that kind of evaluation of what should be the next step. This was a commercial loan and given to them. Then it was shifted to bank because of pricing. The pricing was much better with the bank. Then it was moved to bank, and we gave the guarantee, and we are confident that this will be able to service. Right now we feel that it will be serviced, so we don't see any reason for provision. They have a multiple business. SVL is a holding company. And they have multiple businesses. It is too many details. I'll not be able to tell you here. But I think the business is doing well, and there are sufficient contracts in hand. So I feel they should be able to come out successfully. Almost every quarter we review the situation, and there is adequate security against that guarantee. So the security, which is a valuation given by the reputed company. So we have enough security on that. So I don't see any concern on that. I feel the group will find a solution, and definitely the adequate coverage is there on the loan, on the guarantee given by us. And we are very confident that things will be serviced and addressed.
All right, with that, as we wrap Chartbusters, just keep an eye out on the bottom of your screen. Some national news coming in. The Supreme Court has vindicated the Delhi government, saying the LG can't act as an obstructionist and has to work on the advice as well as the aid of the Council of Ministers. We will take that forward, but on Trading Hour, as of now, Chartbusters ends here. Stay tuned to CNBC TV 18.